Hello, everybody. I want to thank you for taking the time out of your busy schedule to join us for our webinar today, Tapping into Your Home Equity. I am Vicki Buckley with You First Credit Union, and I have been with the credit union since November of 2021. I've been doing mortgages since 2015. I also have with me Jason Quinney, and I'm going to let him talk for just a minute, and then we'll jump right into the webinar.
Yeah, thank you, Vicki. I've been with the credit union for almost 2 years now. I've been doing mortgages since 2005, so quite a while now, and I am excited to be here as well.
Okay, so the things that we'll be covering today, you guys, are student loan payments and the loan rates, equity in your home, and what we can offer you guys. Little known fact, student loans, it's one of the biggest things financially today. It's a big shock that's coming because it's coming due as of October. So it has been on hold for 3.5 years, and there are 44 million people in the US that have loans totaling up to $1.6 trillion, which is quite a bit. President Biden did try to keep people from having to pay those back. However, that was overturned by the courts. And so as of October 1st, they are going to be forced to start taking care of those options. A lot of people haven't put that into their financial things for the monthly, and so it might become a problem. And so we have ways to offer a solution for that. Student loan rates, the average federal loan rate for student loans is 6.36. Currently, the private debt consolidation or refinance loan rates can be as high as 15.3.
So, according to the Kempsey Gardner Institute up at the University of Utah, in 2022, Utahns gained roughly $50 billion worth of equity in their homes. There are about 770,000 Utah homeowners in Utah, and that equates to about $65,000 per household in gained equity. That means that members here at the credit union have about $65,000 that they gained last year in equity in their homes that they could use to possibly consolidate debt, that they could use to pay off the student loans to help them to manage those debt payments that are coming due starting October 1st.
Okay, what we can offer for you. We have home equity terms that go from 5 to 20 years. There are no fees on that as long as you keep that loan for at least 25 months. And we have more affordable payments depending on the product that best fits your needs. That can consolidate all your debt payments into one thing and, even remodel your home. So you can look at putting credit cards in the mix along with that and combining it into one lump sum, still keeping your first mortgage and not affecting it with that great rate that you already probably have sitting there. And then taking care of the student debt and not having to stress about what you're going to do when that comes due. I have helped a lot of people with doing the debt consolidation, and it's made a big difference in their lives with trying to have all their credit cards put in one and the student loans added to that. It just gives them peace of mind, and they don't feel like they're just tied to the house still, because it actually frees up equity, frees up money that they didn't currently have prior. And so it's a good option for people to be able to move forward and just get things taken care of. So, you have anything else to add to that, Jason?
Yeah, there's a lot of people are sitting on, over the last couple of years, we had the rates down in the 2s and in the 3s. So a lot of people are sitting on those rates, and we don't want to touch those first mortgages. So a lot of these options, as Vicki was talking about, we have the equity loans or home equity lines of credit that we're able to tap into the equity for you. So we'd love to chat with anybody that has questions about consolidating credit cards, consolidating any other debts or student loan payments, and help you take care of that before those become a problem. The time to take care of that is before those student loan payments start, before they become something where it's cramping your budget and you're not able to afford those, before it becomes a real problem for you. Oftentimes people wait till it becomes a problem and then they try to take care of it, and at that time it's something that we can't actually help with because it's become too late. So please reach out, give Becky a call, give us a call. We'd love to help you out before it has become a problem for you.
Yeah.
So
We had a question come in. What are the current rates for home equity?
why don't you take that?
Well, that is based off of your credit score. And depending on the equity that you have in your home, so we do up to 95%.
Yeah, there's several
So-
different options for you.
Yeah, so it's hard to quote that until we know where you're sitting with your scores and where your home equity sits. But as far as the terms and payments from the 5 to the 20 year, if you were looking at a 15 or 20 year, that one is kind of cool because what we do is we amortize it over 15 or 20 years. But it does have a balloon payment that gets called due in the 6th year. So say things change in the near future and they stop raising our interest rates and things go down, then we can look at rolling it into a first mortgage to make it more feasible. And also we look at waiving those fees as long as it goes back to us as the credit union doing that loan. So it's a way to keep your payment as low as possible, still taking care of everybody's needs and then looking to the future to change that.
Mhm.
Great. Yeah, we don't have any other questions.
All right, yeah. So as Vicky was saying, the best thing to do is their interest rate's going to depend upon your individual needs, what term you want, your credit score, what your situation is. So the best thing to get the exact quote for you is to give Vicky a call. Her information's up on the screen now. That's her direct line or her email. You can reach out to her. There's also a QR code there. If you want to scan that, you can do a quick application on there. We can give you an exact quote based on your credit score, your exact information, and tell you exactly what we can do to help you out. We look forward to helping you out with taking advantage of the different products that we have and getting your situations taken care of.
Actually, I have one come in from
Perfect.
Candy. I still do not understand what is the benefit of home equity versus, say, let's see, second mortgage.
So there are 2 types of products out there. We do the fixed rate second mortgage side of that. So with the fixed rate, the advantage to a fixed rate loan is you always know what your payment is. So it's a closed-ended product where you're going to draw that money out all at once. So say $100,000, you draw it out, it starts that payback process. The HELOC, which is a home equity line of credit, is a different animal. That is an adjustable rate. So depending on what the feds are doing, if they're raising that rate, it could change monthly. The other difference to the home equity line of credit, it is an interest-only option. So if you're only making your interest on that, it's still building and you're not paying anything down unless you make the payment after you make the principal or the interest payment only, and you make an additional principal payment, are you going to start paying that down? So the fixed rate side of it, you always know what your payment is. You're not going to wonder if the feds have changed it and then all of a sudden your automatic payment isn't going to work because it's gone up again.
Okay, great. Carlene asks, is a HELOC available on a first mortgage if it's a jumbo loan?
So you're asking if you can use a HELOC for a first lien product if it's or behind a jumbo loan.
Let's see, is a HELOC available on a first mortgage if it's a jumbo loan? So if that first loan's a jumbo loan, can you have a HELOC on it?
I believe you can. That would actually be a question, would actually get you in touch with our HELOC department on that one.
Right.
Vicki and I don't actually do the home equity lines of credit, the HELOCs. We do the fixed rates. We would be able to do a fixed rate behind that one, so I would assume we should be able to do a HELOC as well.
Sometimes they have a couple little differences between the 2 of us.
Yeah, but that would be something, if you'd like, we could reach out to Vicki after the call on that one, and she can get you in touch with the HELOC department on that as well.
Yeah, and they could get those questions answered.
So if you're interested in the HELOC, then we can get you in touch with it.
Okay, yeah, and Carlene said behind a jumbo.
Behind the jumbo, we can.
And Jennifer, thank you. And we have Jennifer asking, can you do a purchase second? How much can you go to LTV?
a simultaneous purchase on a fixed rate. So you want to do like an 80% first and then a 10% second. Yes, we should be able to do that.
Awesome. And Carly, yes, Carly said behind the
And so we would do that up to 90%.
Great. Let's see. Oh, we've got a bunch coming in. Great, thank you. Everyone put in your questions because now's the time to do it. Let's see. Handy asks, is HELOC available if we plan on building a second home at a rural area? What are our restrictions?
So one of the big restrictions on a rural area that you're talking about is, do you have access to it year round? So if you're, say you're up in the Uintas and you can only get to it in the summer months, then no, it's not going to be available. We're not going to do a loan on something that you can only access to it 6 months out of the year. That would be one of your big restrictions. If you have year-round access, then on a second home, I believe there is options to do that when there may be some little bit of LTV restrictions, a little bit lower LTV. That would be, again, a question. If it's on the line of credit, we would have you talk with the HELOC department. If it's on the fixed rate, then are there different restrictions on that one that we would do?
On the
Fixed rate,
the
on the
fixed rate.
loan to values?
It's under the 80%, I believe.
Be it.
Double check that. Yeah.
So,
Gail asks, what is the maximum percentage of your equity that you can borrow?
250 is our max, right?
well, on that, for the loan amount,
Yeah.
250,000, but the loan to value, it depends on your loan amount that you have.
Right.
So we would go up to
250 if it's under 80%.
under, and then we'll go up
And
to,
then-
will we go up to 95 or 90%?
95, I believe, yeah. 75,000 is the max if you're going up that high.
So
75 is the second.
again, it really depends on each situation
Right.
as well. So if the combined loan amounts are smaller, then we'll go up to a 95% loan to value. But if we're behind a jumbo, we're not going to go quite as high as well. So it just depends on your individual situations, so what we can do.
Hay asks, can you do home equity loan for rental properties?
No. We cannot.
Handy asks, is there a page in your website to educate ourselves on HELOC? We do have a HELOC page, but you can also call one of the mortgage consultants or
Yep.
visit your nearest branch
Right.
and they can walk you through it for sure.
Yeah, you can do that. Reach out to Vicky. She can or talk to you about the fixed rates or the HELOCs. On the QR code that's on the screen as well, that will actually link you to the HELOCs, or that it links you to the mortgage page, but there's a section on there for the HELOCs as well that you can get to from there.
Gwen asks, can I get a HELOC if I have a 1 to 10 ARM, only 2 years into the ARM? ARM.
An arm.
Oh, yeah, we
Can
can
you
do,
do?
I believe so. As
We
long
should-
as there's enough equity, yeah. And everything works with the debt to income part of that, because if it's climbing, we'd be looking to see where that is, yeah.
That probably leads into Greg's question. How is the value of the home determined for a HELOC?
It is with an appraisal.
So yeah, if they did the appraisal on the ARM, that's how you would find the
Yeah.
equity.
Yeah, so we would see if there's enough there to do, if it would fit the needs for both sides.
Mhm. Great, and that was our last question. Unless someone has another question, get them in if you can, or if you have anything you want to ask.
Okay, looks like that's it.
Yeah, great.
Well, I want to thank you guys for taking time out of your busy schedule to actually sit and listen to us, and love to be able to talk to you. If you guys have any other questions or anything that I can answer that way, we'd love to be able to take care of you.
Okay, great. Thank you very much.
Thank you.